Is the Santa Claus Rally a myth, or is it actually the most profitable 2 weeks of the year? Here is what the data shows. Since 1950, the S&P 500 has averaged a 1.3% gain during the last 5 trading days of December and the first 2 trading days of January. That move has occurred roughly 79% of the time. But this year, 2025, is different. We just saw a Federal Reserve rate cut on December 12th, combined with record-breaking Cyber Monday sales. The market is being primed for a strong end-of-year run. However, you can't just buy the index. The real opportunity comes from identifying specific stocks that are positioned to outperform during this seasonal window. I've identified 5 stocks, ranging from a tax-loss rebound play to a buy now, pay later momentum name, that are uniquely set up for this Christmas period. Stock number 1 is the direct beneficiary of how financially stretched consumers are spending money this year. That stock is Affirm, ticker symbol AFRM. The data is clear. Adobe Analytics reported that buy now, pay later usage hit an all-time high this holiday season, driving over $1 billion in sales on Cyber Monday alone. Consumers are increasingly using installment payments to fund holiday purchases, and Affirm is a primary beneficiary of that trend. Historically, higher interest rates pressured Affirm's margins. But with the Federal Reserve now cutting rates, that headwind begins to ease. This creates a powerful combination. Usage remains at record highs, while the company's cost of funding starts to decline. After a brief pullback following the Fed announcement, the stock stabilized, which often acts as a shakeout before momentum resumes. When markets reward momentum, volume is the signal that matters most. Stock number 2 is Shopify, ticker symbol SHOP. Shopify is currently up more than 45% year-to-date, and it just smashed Black Friday records with $14.6 billion in merchant sales. This stock tends to perform extremely well during the Santa Claus Rally window. The reason is simple. Shopify is a high-beta technology stock. When institutions engage in year-end window dressing, buying their strongest performers to show clients they own the best stocks, Shopify consistently ranks near the top of that list. From a technical perspective, the setup is clean. The stock is forming a classic bull flag consolidation following earnings. A break above the recent high could trigger momentum-driven buying into year-end. In December, betting against strong trends is rarely the right move. But there is another powerful seasonal trade that many investors overlook. December is also when investors sell their biggest losers to harvest tax losses. This forced selling creates artificial pressure on otherwise solid companies. Once that selling pressure ends, typically by mid-December, those stocks often rebound sharply in January. A prime example is Enphase Energy, ticker symbol ENPH. Solar stocks have been heavily out of favor this year, but Enphase is not a speculative business. It is profitable, it has a strong balance sheet, and it operates from a position of financial strength. Lower interest rates are a major catalyst because very few consumers finance solar installations when borrowing costs are high. As tax loss selling fades and rates come down, Enphase becomes well-positioned for a potential January recovery. That brings us to the final 2 stocks, one focused on speed and one focused on safety. For speed, it's Coinbase, ticker symbol COIN. Bitcoin has historically performed well in the first quarter. If the market has shifted back into a risk-on environment, Coinbase offers leveraged exposure to crypto activity without owning the coins directly. It is volatile, but when it moves quickly. For safety, the answer is Amazon, ticker symbol AMZN. It may be the boring choice, but it is often the correct one. Heading into 2026, analysts broadly rate Amazon as a strong buy. If the rally continues, Amazon participates. If the market pulls back, Amazon provides stability. It captures cloud growth through AWS and a recovery in consumer spending within a single company. The strategy here is timing. The Santa Claus Rally officially begins on December 24th. Affirm and Shopify align with the pre-Christmas momentum trade. Enphase is positioned for a post-tax loss January rebound. And Amazon remains a long-term core holding for stability. We are now in the final stretch of 2025. Don't let the holidays distract you from one of the most consistent seasonal setups of the year. As always, make sure to do your own research and manage risk accordingly. Thanks for watching, happy holidays, and let's finish the year green.